Okay, testing, 1, 2, 3. The Wayne in Spain. 1, 2, 3, 4, 5. So good morning, everybody. I believe it's the 19th. Let me double check. Yeah, 19th, Wednesday the 19th, 2018. It's your daily Forex trading strategy session. Today we're going to cover gold and oil, dollar pairs like euro dollar, pound dollar. We're going to cover yen pairs like pound yen, euro yen, Aussie yen, Kiwi yen. And then we'll cover whatever you would like me to discuss. So we'll open it up to Q&A. You're the boss. I'm just the humble currency coach. Happy Wednesday, hump day, I guess, as they say. Oil inventory day. CAD day. Anyways, without further ado, let's get going. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results, but please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. My name is Wayne McDonald. I am the Chief FX Market Strategist for TradersWay.com. Thank you very much for attending today's webinar, hosted by Forex.Today at the Forex.Today YouTube channel. Please subscribe. The reason I ask you to subscribe is that when I hit start on the live stream, you're notified. And if you want to join, you just click and you're taken directly to the video. So, and there is a live chat. So I guess it's over here. No, there. It's over there. The chat is over there, so you can ask questions and stuff and be involved, be a part of the community. So anyways, why am I here? Well, I've been trading currencies for a very, very long time. Many years, more than a decade. It's a long time. I think it's 14 years. I saw an old video the other day, and it mentioned what year I started. I'm like, really? 2004? I guess it's kind of right, but I traded before then. Just not full-time, I suppose. I don't know. But anyways, it's a long time, 14, 15 years. I've dedicated myself 24 hours a day to trading currencies. So how can you benefit from that? I can teach you technical analysis. I can teach you fundamental analysis. But I can also screw your head on straight if you also need that. And maybe you'll learn something. Maybe we'll just simply have fun. But either way, I'm very happy to be part of this community and trading with you every single day. So anyways, nice to meet you. I'm Wayne. I'm also the Chief FX Market Strategist for Traders Way. So get this. Maybe, just maybe, if I help you become successful, push you in the right direction, help you identify your strengths and weaknesses, help you identify the things that you should really be focusing on so that you become a better trader, a more consistent trader, a conservative trader, but most importantly, one day a confident trader, and you become ready, you feel like you're ready to start trading real money, putting it into a trading account and putting that into a daily, the daily battle. Maybe, just maybe, out of loyalty and respect for these educational webinars that I do every day, maybe, just maybe, you'll consider Traders Way as your broker. You'll go there and open up an account and trade there. That's kind of the grand plan. So I hope you're okay with that. We'd really like you to become part of the family. But without further ado, let's get going. Actually, let's zoom in here a little bit. What I want to do today, so I'm at Forex.Today now. I want to go through the calendar. So let's do today. CPI out of the UK. Nice. CPI out of the UK. Doing quite well, 2.7. Year over year. Here, I'm just get it so that you can see it with the chat overlay. Okay, anyways, that's pretty good, right? I think that's quite good. 2.7. Well, maybe it's not the good type of inflation. Hey, good morning, Daniel. Maybe it's not the good type of inflation. Maybe their currency is falling apart, but actually it's been rallying lately, right? So maybe, I don't know. So that's good. Core 2.1. What does that point to? Oh, Pharaoh's checking out Traders. Wait, right on. So, yeah, 2.1, moving in the right direction, right? Was 1.8 and then 1.9, now 2.1. It's even picking up speed. So, you know, what that tells Carney is, hey, Carney, we have this Brexit risk. We have all kinds of other types of risks, but inflation is on the rise. And whether it's good inflation or bad inflation, you might have to start doing something. Right? So 2.1, that's core. So their interest rates should be, one would think, maybe higher. So that's what's the plan. And if the Bank of England is going to raise interest rates, typically what happens is that currency appreciates. Okay, especially if it's more than one and done. That's really what happens, because you know, because the pound has been strong lately because the market is pricing in an interest rate hike. Okay, so that's already being played, but 2.1 or 2.7 on the headline, people might say, wow, there's more than one hike coming up. There are future hikes, maybe two this year. And if so, that has to be priced in. So remember, it's not the one coming up that's priced in, it's the one after the one coming up that gets priced in now. Okay, so anyways, that's very interesting stuff. What do we have on the calendar today? Building permits at 8:30, housing starts at 8:30. Not that big of a deal for the United States of America. I wouldn't expect a lot of volatility out of that. Okay. At 9, we got Draghi speaking. Okay, well, maybe he'll say something important. Yeah, that'd be great. Yeah, so anyways. Okay, great. We'll see what Draghi says. And then, of course, you guys trade Asia? How many people here trade Asia? Be interesting if we should do like a live Asia stream once in a while. You know, GDP out of New Zealand, I think is actually very, very interesting because it's still a fairly high yielder and it's been beaten down like a dirty dog, right? So maybe, you know, at some point I'd like this to go up. And if you remember, we're now in the 3rd week of September. So starting a month ago, I wanted to start looking for a change in direction and all that kind of stuff. So maybe a technical change in direction, and then you get the fundamental change, like an improvement out of GDP and stuff. Right, they're actually expecting a drop in GDP. So Joe and Jim. All right, so not a lot of interest in Asia, no? Okay. Well, anyways, that's tradable. Okay. Anything out of the RBA you should watch. So anyways, that's cool. What's coming up? Tomorrow, Swiss National Bank. They're going to lie to us. Stupid, rotten Swiss National Bank. Then retail sales out of the UK. Yeah, well, you know what? Here's the interesting thing about retail sales. It's measured in currency. It's not measured in units. So let's say retail sales was measured by how many t-shirts were sold. Literally, how many t-shirts? One t-shirt, two shirt, right? So you could say retail sales were up because last month we sold 150,000 t-shirts, and this month we sold 160,000 t-shirts, right? And then you get like a percentage out of that. But what actually happens is, because there's so many different things to sell, the world is more complicated than just t-shirts. Then what happens is they say, well, how much product did you sell in terms of currency, not units sold, but currency? So you could say, well, we sold, $158 million last month, and now we sold $162 million this month. Well, now it's in dollars. So the interesting thing about the pound, if the currency has been weakening, retail sales goes up only because their currency buys less, so any imports and all this kind of stuff. So really, it just requires more pounds to buy the same thing. Another example of this in retail sales was back in the United States, back when gasoline was like $5 a gallon. As oil prices went up, and then more importantly, gasoline prices went up, retail sales looked like the economy looked like it was booming. Like, wow, retail sales is on fire. Holy smokes, look at those big numbers. But it wasn't really the case. It was people crying because they're like, man, it cost me $200 to fill my gas tank. Now I can't go out and buy, this thing I was saving money for. Now I can't go out and bar and go drinking all weekend. Well, those guys tend to do it anyways. But what I was saying is the economy might be slowing down, but retail sales is on fire. Well, you're either paying too much for something like energy, or your currency is lousy and you have to spend more now to get what you used to get for less. Okay? So anyways, be careful on that. Thursday's continuing jobless claims. That's all normal. Philly Fed. Yeah, Philly Fed. Okay. Existing home sales. This is the one I like to watch out of all the retails, out of the home sales stuff, out of the real estate stuff. Existing home sales, that's the big one. And I think the trend hasn't been very good lately. And then way out there, lots of non-important Japanese stuff. Great. Coolio, right? So anyways, that's all at Forex.Today. If you remind me on Monday, we could update ourselves and look for changes on the Commitment of Traders report. Right? If you want to do that yourself, feel free. Just go to Forex.Today and click on COT report at the menu. You don't have to log in or anything. Cool, right? Cool. Euro yen? Yeah, I can do euro yen. Any other requests? All right. By the way, I'm very, very close to making a decision on redoing my rig. I think what I'm going to do is buy a 75-inch 4K screen. I was going to get 3 smaller ones. I'm thinking one big one, but then take 6 monitors and have 3 on the left and 3 on the right, and then the big screen in the middle. My other plan is a smaller 4K, so I'd have 4K, 4K, 4K. It's 114 inches wide, and then do 2, 4, 6 above it. So have 1 above it and then 3 below it. So you go 6 and 3. or I might just do 1 and 3 and 3. I think the upside with the 3 4Ks is that you actually get more data, right? I actually looked at a 5K video card, but I couldn't really find a 5K monitor. So that's kind of weird. But I don't know. The light show behind me is bugging me a little bit. I gotta figure out what I'm gonna do. Because that rig I've had now for 10 years, right? At some point I gotta replace it. So if you have thoughts, leave them in the comments. Should I do the ginormous 4K screen with 3 on the left and 3 on the right? So have a 7-screen setup. So it'll have 6 1080p's and 1 4K. Or should I do 3 smaller 4Ks and then 6 1080s across the top? Yeah, Mike's like, what's wrong with the existing ring? Well, the big thing, Mike, is their LCDs, and they heat up the room. Costs a lot of money to do things like air conditioning, right? So, I don't know. And of course, think of it. If I was running, let's say, 7 screens instead of 18, I don't need this stupid computer, right? I mean, my computer runs 16 screens, and then the other 2 I do externally. But like 16 screens, that's stupid. I want to just run a basic, simple computer with 7 screens. But anyways, leave it in the comments if you can after the video. I'll go back and honestly, I'm trying to make these decisions. I have them all measured out. But anyways, so let's get going. All right, Aussie Yen. Hey, we hit our target from Monday. Good job, everyone. Boom, boom, boom. Now remember, we set this up when it was falling. I didn't quite get the double bottom, but, you know, we hit the reversal spot. We had it going up to here. And then on Thursday, we had the pullback, buy the dip, roll reversal plan. We did it on Thursday of last week, so it's Wednesday today. I covered it again on Friday in the swing trading group. Covered it again on Monday here in our webinar. And now it's Wednesday, and we've hit our target on the second move. This was the first move, bottom to top, right? Right? We had it buy here. This was the target. This was the profit-taking pullback. Here was the buy zone on the roll reversal up to the target, and we're done. 83.50. That's what we talked, or sorry, 81.50 is what we talked about just even yesterday when we were still below this. So good job. It's Wednesday now. What do we do? Well, you could take profit. You could counter trend trade. Okay? But you should do something. Hope is not a strategy, right? You need to do something. It's your job. Okay? Imagine that you're managing, you know, like for example, I know several people that manage, you know, 300 million. Okay? And that's considered small. They're not currency traders, so it's small for them. You know, actually, a currency trader of 300 million can do really well. You know, they're stock trading people. But anyways, you know, they have a small fund. They have 300 million. You know, in this situation like this, it's their job. Think of it that way. Like, they go to work and they're supposed to. And that's the other funny thing, right? They don't actually do anything. But it's their job to manage the risk in the market. And you could say, wow, we drove the Aussie yen up into this area. Now we need to manage some risk. Okay? Yeah, no, I'm building it. Just wait. I'm building it. I'm building something really, really beautiful for you guys as far as the setup and the thing and some training videos and you know, all this kind of stuff. Just wait. I'm building something beautiful for you. Like soon, like in a week or so. Okay. So anyways, you're supposed to take some profit. The reason I mentioned this, and maybe we should get rid of like that fib. Where's the fib? Get rid of the fibbo. Okay. You see this pivot here? This one here, if I can grab it. Monthly M3. That's where bears are supposed to short. Okay? But that's only half the equation, right? Yeah, or Jim, you could just wait, right? Okay, so just wait. I got it. I got it for you guys. Okay, so anyways, right in there, right? If a bear is supposed to sell here, and bulls are supposed to take profit here, yeah, Harley, that's kind of what I'm thinking, to give you the tools and some basic training videos, that kind of stuff. Yeah, so let me build it, okay? It's being done. Okay, it's being done as we speak. It's being done. Just hang on. Okay, so if bears are thinking about selling here and bulls are supposed to be taking profit here, what's the risk? Well, the risk that it comes down harder or faster than you would like if you're a bull. So a bull's thinking, well, I hope it goes higher. And it may go to, like, I have here 70 marked out. The actual high is like 81.90. So it could go like all the way to 82. Well, we're at 81.50 is where you're supposed to get out. And then 70 is going to be a challenge, and then 80 is going to be a challenge, and then 90 is going to be a challenge, and then 00 is going to be a challenge. Like, dude, this was easy. Now you're going to battle it out here. And the funny thing about newer traders is they'll wimp out here where they're supposed to be strong. And then they'll get up to the pivot profit zone where there's a, you know, and then battle out here. Like, that's where you're going to be brave. No. Don't be brave in a pivot profit zone, right? You're supposed to take profit and be done and say, whoa, good enough for the girls I go with, right? I don't feel good about this one, Sarge. All right, well, maybe you should sit this war out, right? No, like, this is where you run away. This is where you're supposed to be brave. Buying and putting together a trade plan, right? And then actually, you know what? It takes a lot of guts to take profit, even if you made, you know, straightforward kind of pips, right? So anyways, think about it. This is where bulls want to get out, or should get out. This is where bulls, boy, I screwed all that up. Let's do it again. This is where bulls are thinking about taking profit. This is where bears are thinking about selling. If somehow they both agree, this falls, and everyone thinking about maybe taking profit but doing nothing is going to pay the penalty of giving back 30 or 40 or 50% of their profit. When you could just take 100% of your profit and then be a docent at a museum. What'd you do today? Monet and Degas? Okay, how's this one going, our USD Kitty CAD? Huh, that kind of looks like a down, right? A down, 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 up, up, down, 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 down. Look at our target, guys. And the thing about that target is it's going to be a huge double bottom. Do you remember drawing this triangle? What does that triangle mean? Okay. Yeah, David says, why does my MACD only have one line on it? That's the one that comes with MT4. I'm like, who invented a one-line MACD? Right? Like, what is that all about? So you have to use a custom one. It's like, who invented a one-line MACD? It's so strange, right? So in the thing I'm building, so just for everyone, I'm going to build a download package where you can download my exact charts with all my indicators, the correct MACD, the correct stochastics, with the correct colors, with the correct settings, including the indicators and some EAs, so like the correct pivot points, but more importantly, the correct pivot points with the proper templates, because if I give you the same pivot points, you pop it in, they don't look like mine. Well, I've adjusted them. So I can give you the indicator or the EA, but also the templates and the charts and the layout, so you can have my news layout, and then you can have my euro dollar with the 3 or 4 different time frames, and just like give you all of that, and training videos on how to install them, how to use them, training videos on the basic trading strategies and all that kind of stuff. Put it all together in a beautiful little package with a bow, and maybe even like a one-on-one consultation, so we can get together and work with you to identify your strengths and weaknesses and give you ideas on what kind of training you're going to need. Like, pretty. Loufle to lumum. So just hang on. I'm just responding to the comments in the chat. Like, just hang on. It's on the cavalry is on its way, brother. So anyways, we drew this several days ago. I think it was Monday, to remind ourselves, this triangle, that if we get down to this target, to take profit. So this was, and you can see our short here. So what was our short? It's so hard to see. So we shorted 130 and some change. What is it? I can't even see. Just below this area. 130.70. So we shorted 130.50. So, we're about 100 pips in the green here. Oh, sure. Yeah, okay, John. Luis, can you trade for me? Well, if you got $10 million, we can talk about it. Somebody just the other day, they're like, Wayne, I have 100 or 150,000. I'm like, okay, well, let's think about it. If I doubled your account, you're going to pay me 20 grand? I have to work day and night, night and day and night, night and day for 20 grand? Double your money, which, by the way, is a difficult thing to do. No, thank you. Like, sorry, bro. Just, like, no. 10 million. You're like, okay. So if I doubled it, which would be crazy, but let's go with it, then you would pay me 2 million. Okay, I'll seriously work at something for $2 million, but not for 20 grand. Forget about it. I can't even get my yellow Lamborghini for 20 grand, right? 200 grand, not interested. 2 million, we'll talk about it. But anyways, forget about it. All right. Actually, I need 20 million for something. Just actually for capital. I'm not even going to spend it. So if anyone wants to just give me 20 million that I can sit on, okay. All right. Luis says, how much do I charge per hour? Well, I haven't mentored anybody in a long time, but if you need mentoring, I don't know, email me, Wayne at FX Bootcamp. I haven't done it in a very long time, but who knows? I'm always open to ideas. So let's move on.com. So first target hit, second target, very close, on its way. Euro dollar, okay? Look at this. Well, plan A, this was on Monday, right? Plan A was to buy it here. You can see this, up, 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 up. Well, first of all, last week we had it coming down, right? We talked about profit taking, all this kind of stuff. Then plan A was to buy it here. Okay. So now you're like, well, Wayne, what do we do now? Why don't you put me in a new trade? I'm like, but what new trade? Right? This is the whole thing. You got to like think of it this way. This is where you're supposed to be brave. When I say, well, plan A and then there's plan B, notice I don't say sell anywhere. Right? So there's plan A, you buy it here, or plan B, buy it here. Like, why are you so aggressive now? Now that it's moved, you're like, well, Wayne, get me into another trade. I'm like, what other trade? So the way I look at things is macro first and then micro, right? So the macro trade, or the weekly swing trade, if you will, was to buy it here and drive it up there. So that is the move where we're going. So you could be buying dips along the way and try to drive it up there, but nonetheless, we're trying to drive it up there. Now, yesterday, I think it was, we were here, and I said, well, there's definitely resistance here. Definitely. So it's likely to drop, and then bulls have a second chance to consider. They need to think about this. Buying a retracement back to that 4-hour 21, back in this roll reversal, and driving it up to the target. But there's definitely bears there, right? Do you remember talking about that? We know they're there. You can't see them. And all of a sudden, boom. Oh, there they are. But we also knew that bulls were probably going to try to drive it back up. Well, it's even worse than I thought, actually, because bears did what they were supposed to do. Bulls did what they were supposed to do. And now we're doing it again. We're reliving it. I hate that. I have no patience for that because that's risk. The plan was to buy it here, drive it up there. Good. All right, along the way you can get some consolidation. That's fine. Buy the next dip, drive it up. Good, that's fine. But to do it again, you're like, well, where are my bulls? I don't like that. You see that? So you have a choice. You could move your stop, let's say, because your original entry is down here. What do? Move your stop there and lock in a small profit? Yeah, I guess so. Yeah, Rob B is like, we don't have 10 million. Yeah, I know, that's fine. I'm just saying it makes sense, right? And the numbers have to add up. Remember, the reason a lot of young traders fail, and I mean like amateur retail traders, but even young professional traders, one major reason they fail is there's just not enough money into it. So they trade big, right? There's a professional group selling, a program and live trading room, and every once in a while I get emails from them, and they tell me that they're so good of traders. They've been trading forever. They speak on TV and all this kind of stuff. I'm like, that's good. And then they show you that they make 120 pips a month. I'm like, 120 pips a month, not per trade, like per month? I'm like, okay, so these guys are high rolling, living the big life, flying first class, right? So that means what? They're trading 10 standard lots per trade? Wait, well, one standard lot, they're making $1,200 a month. So they're making $600 each? No, right? Well, that wouldn't work. So if it was 10 standard lots, they're making $6,000 each. No, so they're making at least $60,000. All of a sudden, they're like, dude, these guys are dropping $10 million on every single trade they're doing. I'm like, I highly doubt that. I highly doubt that. Like, it's dangerous to show someone like, hey, if you make 120 pips a month, you're going to be a bajillionaire. Well, that's not actually true. You don't want huge high leverage like that. There's no way. So you got to look at it the other way. You should be concentrating on trades that earn let's say 120 pips each. Or even better if you got a trend, and let those winners run and add to new ones and manage your risk and all that kind of stuff. But you want small lot sizes, not big lot sizes, right? So I would rather you focus on building a track record of success. It might take you 4 or 5 years, bro. It's, again, the example I use, I signed up for an elite program at Harvard, and they're like, it's 4 years. I'm like, yeah. And then they're like, you need to prove to us you have enough money, that you're not going to quit halfway through, because it's very expensive to go to Harvard. I'm like, okay, well, here's all my money. And they're like, okay, good. Now you have to prove to us, right, that, right? Anyways, I had to get 2 people. One of them, my wife, had to write a letter saying that she supports me, supports the idea, will back me up, will be my foundation as I go through this 4-year program, right? Like, they want, right? Think of it that way for you, that your spouse has to be behind you. You have to put everything mentally, physically, and spiritually into this. You're going to have to sacrifice time and money and all this kind of stuff to build your track record of success. It might take you 4 years. And when you get that, you'll have a track record that can attract money. Because if you only have a little bit of money, you're going to have to take a phenomenal amount of risk to make an income. But we know phenomenal amount of risk is where you fail. 120 pips a month ain't going to make you a yellow Lamborghini, right? It'll put you in the poorhouse, right? You're going to lose everything. So you should look at it more like, I want to trade like a business. I want to have a 5-year plan. Right? Imagine opening a restaurant, investing a couple of million into the kitchen and the staff and all that kind of stuff. And then you got to do marketing and advertising, and then buying all the food and making all the food, delivering all the food. You got to have like a 5-year plan for this. You don't want to run out of money in month 3, right? Right? So what you have to do is say, all right, for me to make a lot of money as a currency trader, I should treat it like a business, and eventually I'll probably going to need customers. In this case, investors. And what does an investor want? Conservative, disciplined trades with very little risk, a trading history of consistent results with low volatility and low drawdowns, just lots and lots and lots of really, really boring trading. And that they can look at it and almost can count on that income from you because you're steady. You're just a machine of just steady, boring trades. Their money's never in crazy jeopardy, right? And so therefore, every individual trade has very little risk relative to the lot size. Well, then how do you get the yellow Lamborghini? You need to be worth something, not a degenerate gambler. You need to be worth the investment. So now, if you have $1 million, maybe you make a couple $100,000 a year. Maybe less, maybe only 100. In a lot of places on the planet, you can live pretty well with $100,000, and your clients are super happy. But here's the thing. Maybe your first year or your second year or your third year, you don't even make much money as a professional money manager. I'm sorry, I know I'm supposed to be giving you the get-rich-quick scheme speech, but I'm not. Like these guys that manage $300 million, right? Think of it this way. Their first year, they made hardly anything. They had to live off the salary of their employer because they didn't have the $300 million. They didn't cry about that. They didn't lease their yellow Lamborghini and drive it around. So in the first year, they made hardly anything. In the second year, they made hardly anything. In the third year, they made hardly anything. But they started getting their clients and customers. They're building their assets under management. And in the fourth year, they made a little more money. In the fifth year, more money. In the sixth year, more. It takes 10 or 15 years, maybe 20 years before you're like, dude, I'm ready for my yellow Lambo. But that's called a business. Isn't it like logical? Right? So we need to focus on these longer moves, these fundamentals, so you can sit down and talk with a client, say, oh, you heard about Turkey? Let's talk about what's going on in Turkey, right? All this stuff. Oh, you heard about Brexit? That's very interesting. In fact, I just watched their CPI this morning, and it's coming out hot. 2.1 on core really puts the Bank of England in a tough spot. They face this Brexit problem, but they have inflation now because of a devalued currency. So what do? Raise interest rates? Not raise interest rates? This is what I deal with, right? And now you can have intelligent conversation. But, if you focus on that, if you're worth assets under management, if you can get someone to invest 10,000 and another person to invest 10,000, another, or 100,000 and 100,000, but over time you're attracting because you can show people you have a low drawdown and low volatility and consistent returns and clearly an obvious strategy going on, and you can speak intellectually with you will attract money. There's so much money in the world right now. It's unbelievable, but nobody knows where to put it. Right? Focus on that. That's where we need to get you, right? Don't worry about the money now. Don't worry about making big money now. Worry about developing true skills that you can then use to build a track record of success and then actually be a currency trader for years and years and years to come. And even in year 6, right? You might not be a baller yet. You'll get there. You know how you get there? Maturity. Responsibility. You're a responsible, mature trader that makes smart, intelligent decisions. That's what the world needs. I'm telling you, that's the way you get it. And then one day you'll probably be the guy like, I could buy a yellow Lamborghini, but I'm not. You'll be fine. Whew, how'd you get me onto that? I'm sweating. Man, you fire me up sometimes. Thank you. Yeah, crazy. That Wayne, he crazy. I don't know how you get me off that. All right. Okay. So let's focus on making some conservative, disciplined trades. I just want to wrap that up. Like, this is where you need to be brave. You've thought about a trade plan. We talked about it on Thursday. Waiting all day Friday for it to drop and buying it Monday, putting your stop. And that's the brave. That's the discipline. And you know what? That's what you bought it at. I can't even see that. You bought it at the psychological level of 80. We're at 81.20. There's your 120 pips. Not for the month. In the last 3 days, not the month. In 3 days, you made 120 pips. And it was boring. That's how you trade. And you do it over and over. Now you can see if you took your profits 25 pips ago, you would have been at the museum by now, drinking your champagne, and everyone else is hoping it goes higher. Look at it. It's coming down. Of course it's coming down. Okay? So anyways, let's go back to oil. Okay? Right? Oh, and here's that trade. Same thing on Monday. Buy it. Now it's coming down. Well, it takes discipline to get out when you recognize the risk. That's going to take you years to develop. Yeah, call it, right? Dalbear says that a large percentage of professional traders fail, right? They're not looking at it as a business. They're not looking at it as a career. So anyways, let's go in. This is oil. You see interesting things here? Okay. A bottom was formed at the London Open, the European Open. Okay. Actually, it's at the end of the day, really, is what it is. But right, top is London Open, I believe. So this is the London Open here. But see how there was a bottom and a market close, right? It's important. And then this market open, so on and so forth. Don't make that big of a deal of it, but the difference between like the euro is the euro in the spot market trades 24 hours a day. WTI, West Texas Intermediate Crude, or Brent, or gold for that matter, they have trading pits because they're futures contracts. Now, this is some sort of derivative of a futures contract, but think of the futures contract. A lot of people trade in oil, if not, let's say, the vast majority, I'd say 99% of the oil industry is trading oil futures. Okay? Even oil companies are trading oil futures. They're not trading this, right? So this is going to be heavily influenced by the futures market because that's what's moving the underlying asset up and down. Okay? So when those markets open, because they're not 24 hours a day, right? They open at a certain time, at a certain place, bing, trading begins. You know, it was the Dukes, right? And then it closes. Ching. Okay? And so you can see, especially these currencies, how important these market opens, how important they are. All right, so this is going nowhere fast, but not down at the moment. I drew this this area in here yesterday. Okay. Okay. You see your lines? So, for example, would you consider that resistance? Yeah, probably should, right? So let's bring this one down. And we'll play it off this other wick. Okay, great. Seems like something's going on here as well. Should probably mark that. Okay, I already have this one marked down here. Okay. So you have to decide whether you want to play the game in the middle here. Okay. It's not that surprising, right? That we found support in there. Where's the next level? I don't know, like here maybe? That's clear, right? Oh, John, it's not an indicator that teaches you how to trade. It just tells you the market opens and closes. Okay, so is this a place where you desperately want to sell or desperately want to buy? And I'd say no. I'd like to sell it a little higher or buy it a little lower. Okay. Yeah, Rudy says down. I believe John says down. Okay. Right. Well, 4 hours ago would have been a little bit better, right? But let's drop into a smaller time frame then. Okay. That's where you say things like, well, at the London Open, right? I want to look for an opportunity to sell. Okay. This low is lower than this high. Okay. So I look at it like this. So therefore, you bring this across, and that's your sell. Okay. So if you were so gosh darn bearish on oil after the London Open, this would have been interesting. Okay. So now what happens? So you look left, you drag this across, and you're like, oh, so there was another sell opportunity. Now we're on a 5-minute chart now, guys. But remember, the 5-minute chart's worthless unless you made the decisions on the other time frames. So selling here is a pretty obvious second chance. Okay. Now you're sitting around waiting for the new lower low. And if we get one, okay, you're going to have to mark this as the new sort of roll reversal area. So, you know, this drop is obvious into support. Great. Rallied back. That's the obvious sell. So now what's supposed to happen? We don't know if it will happen, but what you're planning on happening is it come down to, I don't know, let's say there. Why? I don't know. It looks like it's important. And then what it'll do? Well, it'll do this. Okay. And so your third plan, if you're a bear trading oil in the moment, you're going to look at that. Plan A, plan B, plan C. Okay. So on and so forth. Rinse and repeat. John says that indicator seems to show key moments. Well, be careful because, you know, that's confirmation bias. It's just showing you time. All it's doing is drawing a rectangle around the time. It's not doing anything. Okay? Now, traders are making buying and selling decisions during those times, around the market opens. Okay? Now, I find that these need to be adjusted because they're probably not overlapping my time zone quite properly. But, you know, I think this is really just the London Open. Okay, which means this is off a few hours, which means this is off. So this is an opportunity. That's an opportunity. But anyways, it's just time of day, draw a rectangle. That's all it does. It's not smart. Okay. So gold just doing nothing. So remember yesterday and the day before, so this is 4 hour. Let's go to a 15-minute chart. We had an inside range, which I said you could trade it if you wanted to. And then you have the outside range, which you could trade it if you wanted to. Okay? And that's all it's been doing the last day or two. Yeah, Joe, you don't need indicators. But don't get caught up on indicators being bad or something. A lot of people get very emotional over these things. A stochastics measures the current candle. Okay? Stochastics measures the current candle relative to the previous candles, depending on your settings, 3, 5, 15, whatever. But it's the current candle. Is it making a higher high relative to the previous few candles? Or is it making a lower low relative to the previous few candles? That's all it's doing. You don't need that, but it can be helpful. You can incorporate that into your trading strategy. You don't need it. You can totally trade just naked charts. Great. But that could be helpful information to you. A MACD measures the distance between two moving averages. It's the moving average convergence divergence. Is that important to you? Probably not. It could be. Yeah, it could be, totally. Most people have no idea how to use these things. So my MACD would measure the distance between this moving average and that one. Here they're widening. So you could say, oh, I should be aggressive. And then right about here, they start to narrow. Oh, maybe I should be more conservative. Do you need this information? No. You can just see it using the moving averages. But what if you don't like moving averages? Well, instead of using the moving averages, you can just use the MACD. But if you're just using price action, you don't really need any of that because you're doing something different. So you don't need MACD, but it can be very helpful. You don't need stochastics, but it can be very helpful. You don't need RSI, but it can be very helpful. You don't need these moving averages, but they can be helpful. They're just colors on a chart, and if you know what the algorithms tell you, then you can use it to analyze the market conditions. So like I discussed yesterday, I use the 2155 to measure the market. So I can say, should I be a bull or should I be a bear? It's just a simple question. It doesn't put me into a trade, but I say, oh, well, technically on this time frame is bullish. That's all I need, right? But I could do it in other ways, right? I don't need a moving average to tell me it's been predominantly down. Okay? I don't need MACD for that. I don't need Stokes. I can draw the MACD for this chart right now. Okay? It's below the waterline but rising. Yeah, I can totally see that. Boom. MACD is below the waterline, clearly below the waterline, but clearly moving back towards it. The MACD is crossed up and heading back toward the waterline. For example, let's put it back. Okay, look, MACD crossed up clearly and moving back toward the waterline. Oh my God! I can see the MACD. Actually, I can calculate it in my mind. Well, but you don't need a Harvard education for that. You just need to know what the algorithm is doing. It's really simple. Okay? Farrell says doesn't know how to trade naked. That's interesting. You could totally do it. Pound dollar. I don't want to kill this chart though. It's been so pretty for so long. By the way, look at our target. You see this, guys? Our target was 132.24. And we went to 134.13. Huh. Well, shoot. Okay. Not bad though, right? This was look at the trade plan on Monday, guys. We had this last week. Just like, this is like the third trade now, right? Bought the dip. In this case, it wasn't a pivot point. It was a 4-hour 21, but that's what you do when you're out of position. And you rallied up here. We missed the target by 11 pips. Not bad though, because this was a long and this was a long, right? So where's my little, oh, here it is. So, right, there's, I guess, anyways, 250 to 300 pips. Now, this would have been a buy, so that's 250. This is a buy, so that's another 200. This was a buy, that's another 100. So what should we do naked? I'll give you an example of getting naked. I guess we could do a yen. Kiwi. There's that kiwi we talked about. Look at these yens, guys. Oh. By the way, right? I hope the likes are coming in. We set this one up too, didn't we? On Monday. Actually, even Friday. Yeah. Bought it just below 73. We're just over 74. It's only 100 pips. But that's a decent trade, right? This trade plan didn't quite come to our target. We missed it by about 5 or 6 pips. Seems pretty clear what we've done and where we're going, right? Look at this one. I don't even like USD yen. Okay? That's gorgeous, don't you think? Now this goes back farther than Monday. This is the swing trade for the month. That's pretty, isn't it? The bottom is 110.40. We're at 112.25, right? We've hit 112.40, so it's up 200 pips. Right? One trade, 200 pips for the month. This is like the 5th or 6th trade I've showed you today worth more than 100 pips. Okay. So which one should I get naked on? Look at my rand. And I ran so far away. It's not bad. It's moving. All right, so which one should we get naked on, guys? Anyone care? Let's do, I guess we'll do Aussie yen. Okay, so let us do this. I used to have one called Naked. Guess we could do 3D. I don't know. That's definitely not naked. All right. Okay, we'll do the 5-8. Oh, 200. That's close to naked, right? So, price action is the name of the game. The naked charts. Okay, that's one way. Just identify the support and resistance. It's pretty obvious stuff. And I ran so far away. Right? So you buy at support, sell at resistance. Okay. When you trend, it's slightly different. I'm going to go to a 4-hour on this one. Okay. I like to look for the, let's say, change of direction. So this low is lower than this other stuff, right? So you look left, and that's your new sell. So you make this decision when you're kind of down here. Okay? You simply recognize that this was important, this drop. So you're like, oh, I'm way down here, but this was supposed to be support, right? Like, for example, if this was an uptrend, it was supposed to do this. Okay? Right? Higher low, higher high. That's what an uptrend is supposed to do. Okay? Simple enough. Instead, we're down here, and you need to say, oh man, that totally didn't work out. So you look left. This old support, which should have been support, is now resistance. So I actually draw a box. I look left. I draw it, and I say somewhere in here. Doesn't have to be perfect. It could be a little under. It could be a little over. But it's just an idea, a thought process. Now, this is a 4-hour chart, so you got tons of time to put this together. This could be a 15-minute chart. It could be a 5-minute chart. It's all the same to me. Okay? This lower low, you're like, somewhere around there, I want to sell. Okay? So now it makes a new, sorry. Okay, so now it makes a new lower low. So you say, oh, lower low. So you look left, the old support, right in here. You drag that across. That should be resistance. Got it? So when it's up there, you sell. Okay? Then it drops, makes a new lower low. You say, oh, lower low. You look left, you drag it across, and that's where your new sell is supposed to be. So you're sitting around waiting. Price comes up here. Well, you don't get a consolidation or a drop like this. You didn't get a consolidation or a drop like this. It just went right through. Do you think that's technically important? Yeah, it's like this. All of a sudden, you went through. Instead of making the lower low, you busted through. So now your resistance becomes support, and you buy it. Pure naked trading. There's nothing on here except price action. And price action is really just using support and resistance, right? And support, in this case, support and resistance, I'm only how you say in English? I'm only using price. I'm not using market, based on our conversation yesterday, right? And I run. Anyways. Up, 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 down, down, buy. Right? Up, 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 down, down. Up, 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 right? So now you're up here, up, 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 up. So draw this across somewhere around there. Up, 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 up. So now you're up here, drag this across. Up, 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 up. And you don't like our situation at the moment. This is a moment of truth. What happens now if it makes a lower low? Okay. Let me just draw it to make sure you followed me properly. Buy. 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 Okay. You might have actually called that a high and had this drawn out, and you might have already made the decision of what to do next. But this was, right? This has to go up. It cannot go lower than this. And in fact, you don't like this at all. But you've had to show patience in the past. But if we drop lower than that X, we're bears. This is just a 5-minute chart scalping, guys. Super boring, super easy. Okay? Just skippy scalp, skippy scalp, skippy scalp. Okay? It's a lot of work, and you don't get rich. But you can totally do it. Right? So this has to go up, or it's technically important. This is a lousy, no good 5-minute chart. Right? So what indicator am I using for this? Nothing. There's no indicator. I have this 200 EMA. It's meaningless to me. This is completely naked chart. Okay? Okay? Like even this big move here. See how it's higher than this other move? So what do? Look left, find the old resistance. Now it's new support. Okay? And then you just keep trading that over and over and over again. But what if I get really small on a 1 minute chart in this period? Now I got to see if it'll even let me do that. Okay. Now what? Higher high. Drag this across. Yeah, it's not perfect, I know. Okay. New higher high. Drag this across. Right, new higher high. Drag this across. I know it's not perfect. You could probably use this just because the other thing was so far away. Okay. Okay. Of course, let's say you don't like it. You don't like using that style. The new higher high, fib it. Okay, made a 382, long and gone. Makes a new higher high. Oops. Makes a new higher high. In this case, it makes a 618. Makes a new higher high. Okay, makes a 382. Makes a new higher high. 786. You see how it's the same thing? I'm using a 1 minute chart. You see how now it's like shields up, red alert? What the heck? A 786? This was a 382. This was a 618. This was a 382. 786 shields up, red alert stuff, right? All right. So I think I went too long today. I apologize. So I think I taught you how to swing trade, and I think I taught you how to scalp today. Is that about right? A 1 minute, a 5 minute, 4 hour daily. And we threw in the whole screw your head on straight trader psychology, focus on the long term, teach yourself to trade like a business person would set up any other business. So I hope you really enjoyed it. It's a big day, man. That's a big day. So make sure you subscribe and like. I appreciate that. Give me advice on the screen setup back there. Should I do the 175-inch screen with 3 22s on either side? Should I do 6 22s and 3 43s? That kind of stuff. Also, if you want to see more of that scalping stuff that I covered today, put it in the comments. I don't know what you want from me. You need to communicate. Okay? Put it in the comments. So, and that means if you're in the chat live now, wait like 1 minute. The webinar is going to be over. Refresh your YouTube page. Then you can place a comment. Leave it in the comments so I can come back tomorrow, check out 5 or 10, 15 comments, and then I'll say, oh, now I know what I should cover more during my webinars, because I want to please you. You're my sweet baby. So anyways, peace on earth. May the pips be with you. May our profits be above average. Don't forget, visit tradersway.com. At least open a demo account. Just out of loyalty and respect, open a demo account. Okay? Right? Don't disappoint your mother. All right, see you guys tomorrow. Cheers.